Yeah, $100. I don't think it's out of the question. Back in 1979, I think silver was at $16 in November, and or even end of November, and by January 1980, it got up to 50, so it like tripled. So we could very easily double, and if we double, we're physical demand for silver is overwhelming the paper market. And 3.5 years ago, a little more, we had the silver squeeze movement, and that didn't really go anywhere. We got
Mario Innecco recently addressed the evolving dynamics of the silver market, suggesting that a price of $100 per ounce is within the realm of possibility. He referenced historical precedent, noting that in 1979 silver traded around $16 in November and surged to nearly $50 by January 1980, effectively tripling within just a few months. According to Innecco, this historical trajectory demonstrates that rapid, substantial gains in silver prices are plausible when supply constraints and investor interest converge. He emphasized that such movements are not purely speculative but are underpinned by broader economic and market factors, including global demand trends and the intrinsic value of physical silver. Innecco further highlighted that physical demand is increasingly overshadowing the paper market, creating structural imbalances that can drive prices higher. He observed that despite high-profile events such as the silver squeeze movement several years ago, the market did not fully capitalize on investor enthusiasm. Today, however, conditions are markedly different. Mario Innecco pointed to growing retail and institutional interest in physical silver, coupled with limited supply and rising industrial consumption, as key drivers for potential price appreciation. These factors, he noted, underscore the critical importance of understanding the interplay between tangible assets and paper derivatives in shaping market outcomes. Finally, Mario Innecco projected that silver could realistically double from its current levels in the near term, reflecting both historical patterns and contemporary market pressures. He stressed that investors should consider strategic positioning in physical silver while monitoring macroeconomic indicators such as inflation trends, monetary policy shifts, and global demand fluctuations. Innecco's insights provide a sophisticated perspective, emphasizing that informed participation in the silver market requires a careful balance of historical awareness, demand analysis, and strategic foresight. His analysis positions silver not just as a speculative commodity, but as a tangible asset with the potential for substantial long-term appreciation. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I think basically physical demand for silver is overwhelming the paper market, and to 30, and then there was a lid there, mainly because the big sovereign buyers of physical silver that we're seeing now, and also big investors, they weren't interested in silver. They might have been buying ETFs, but they weren't interested in physical. But now everything's changed. And I think that's why silver is picking up. And also silver has still to catch up with gold, because don't forget, gold in 1980 got to just below 900, and now we are here at I think 4,200 as we speak. And silver got to like around 50 in 1980, and it's just moving above 50 now. So I think, since mid-October, there's been a correction, and a lot of people weren't too sure if silver was going to make it back up. But I think this is very significant that we made it back up, and we've made a new high. Yeah, gold is lagging, but I'm not concerned about that. I think if you look at the gold-silver ratio, it's breaking down, which is a good thing. Back in the 70s and also in 2011, towards the end of the bull market, silver really caught up and went higher. And I'm not saying the bull market is near an end. Precious metals, I think, is far from over. But usually it's good to see silver leading. Remember back in from '05 to '08, even though I was a futures and options broker for government bonds, we had a client that traded a lot of silver. And so I was involved in that. And I could remember $5 days when silver was between $15 and $20. So I don't see why we shouldn't see $5 days again, especially now that we are above 50. And I mean, as we speak here, we're just trading at 56, the spot price. That's a new all-time high. And we're actually up, Elijah, $2.60, which is half of, I guess, five. But thing is, well, if you do a long-term chart of silver and you draw that teacup that's been forming since 1980. The top of the teacup is around 51, 51.50. So not only we're getting like record monthly closes, we're getting a technical close above that lid, which is huge. And the thing is, back in October, we went above that level, that lid. We went to 54.50 or 60 or thereabouts, and then we corrected back down to below 46 very quickly. And technically, that's very bullish. You retest the breakout by going back below the breakout, and now we've gone back above. So I'm not saying silver. I don't like to say, oh, silver will never go below 50 again, because I think it still could. You never know in the precious metals market, but the likelihood is a lot small. I just try to get the best deal in silver. And I think as long as you have silver, that's fine. I think everything will do well. Here in the UK, I like buying the coins of the realm, like the 1 ounce silver Britannias, and I have some like pre-1920 sterling silver coins as well. Those are they're like the junk silver for the UK. And in the US, I would stick to Silver Eagles and pre-65 coinage. And I guess that if you have millions, of course, you might want to think about bars, silver bars, like 5,000 ounce bars and stuff like that. But for the small investors, stick to the coins and maybe some 100-gram bars and stuff like.
Mario Innecco recently emphasized the structural shift in the silver market, highlighting how physical demand is increasingly overwhelming the paper market. He noted that prior initiatives, such as the silver squeeze movement over 3 years ago, failed to sustain momentum, largely because major sovereign buyers and institutional investors were not participating in physical silver purchases. According to Innecco, this dynamic has fundamentally changed, with heightened interest from both governments and significant private investors now driving prices upward. He observed that silver remains comparatively undervalued relative to gold, citing historical benchmarks from 1980 when gold approached $900 while silver peaked near $50, indicating that silver still has substantial room to catch up. Innecco also stressed the technical and strategic considerations for investors navigating this market. He pointed to a recent breakout above long-standing resistance levels, describing it as a bullish signal supported by both chart patterns and strong monthly closes. Mario Innecco recommended that investors prioritize physical silver holdings, ranging from coins and pre-1965 coinage to larger bars for institutional players, while noting that diversification within the precious metal sector remains critical. His professional assessment underscores that informed positioning in silver can provide significant long-term upside while mitigating exposure to market volatility.
Maybe these central banks are waking up to the fact that yes, it's good to have gold as more of a reserve asset, but silver will provide more liquidity as well in terms of a day-to-day asset or money or currency to use for the general public. And I see that. I think it's Ronan Manley and Bullion Star. I'm not sure if it's together with Bullion Star. They're helping develop this token in Dubai, silver-backed token. So I'm not sure exactly yet what that's going to be like. But you could go to Dubai and use silver as currency. So I think, yeah, and that helps liquidity because you're not just focused on gold. You have like a bimetallic standard. That's how it used to be in the U.S. prior to 1873. The most important aspect is that actually central banks like in the Middle East, like the Gulf Cooperation central banks, even Turkey, Russia, China, they're all starting to buy physical silver. And I've even heard that Dubai now, they want to they're creating a tokenized silver instrument. Basically, they want to make silver kind of money again, which is quite amazing. I don't know if you saw the other day, Dubai, they showed this silver bar. It was 1,971 kilos, so almost two tons. And yeah, they're really into silver. We saw that India is going to allow individuals and companies to use silver as collateral for money, for loans, excuse me. So yeah, up until 6 months ago, the reason people gave for silver underperforming gold was that, central banks only buy gold, they never buy silver. But that's completely changing, and I think that's huge. And I think the silver price, right now, we are like in what one would call terra incognita. Like we're in territory we don't know. It's never been there before. But yeah, I think there's such huge potential for silver now that central banks are getting involved. And unfortunately, in the West, very few people are aware of this stuff. I mean, you and I are aware because we listen to you listen to me, I listen to other people in the gold and silver space. But the mainstream is like completely like not really aware of it yet. Maybe the fact that like Tucker Carlson has started his own precious metals dealer might help wake people up a little bit. He's got a big following. So yeah, that's the major thing. These countries outside the West, yeah, they're going back to silver. Even Korea, South Korea, the central bank there has started buying gold again, but also silver. So, and we also seen, Elijah, that the United States and China, they've put silver on their critical minerals list. So everyone wants to get silver before those two giants get.
The silver market is experiencing a historic shift as central banks and major institutions increasingly recognize its strategic importance, not only as a reserve asset but also as a liquid medium for daily transactions. Countries across the Middle East, including the Gulf Cooperation Council, as well as Turkey, Russia, China, and South Korea, have begun accumulating physical silver, signaling a renewed bimetallic approach reminiscent of pre-1873 monetary standards. Innovative developments, such as tokenized silver instruments in Dubai and policies allowing silver to be used as collateral in India, are expanding its practical utility. Could silver truly become a mainstream monetary asset once again? With rising institutional demand, limited supply, and inclusion on critical minerals lists by the United States and China, silver's potential for price appreciation and strategic relevance appears unprecedented, marking a pivotal moment for both investors and global financial markets. If you found this information valuable, make sure to hit like and drop a comment below with your thoughts. Don't forget to subscribe and turn on notifications so you never miss the latest updates. Thanks for watching.